I'm Luke Lango, and this is InvestorPlace Quick Picks, where we communicate to you some of the market's best investment opportunities in just 5 minutes. Today, we're going to be talking about a red-hot electric vehicle stock that has been all the hype on Wall Street lately. The name, Workhorse, ticker WKHS. Now, Workhorse stock is up 825% in 2020 alone on abundant investor optimism that the company's next-gen electric delivery van is going to disrupt the US last-mile delivery market. This optimism is not misplaced. Now, I get it. The stock has come a long ways in a short amount of time. Some people might not want to chase it. Totally fine. But taking a step back, you have a $2.7 billion company on the cusp of disrupting an $18 billion market. There is tons of room over the next 5 to 10 years for this stock to go way higher. So buy now, hold for the long haul. Here's a deeper look. It should be abundantly clear by now that the electrification wave of transportation is here and it's not going away anytime soon. Right, you have one, shifting demand. Millennials are now becoming car buyers. They were raised hyper aware of the environment, hyper aware of global warming, of reducing carbon emissions. They're aligning their purchasing decisions with those goals. It should be no surprise that 91% of millennial car buyers want to buy an electric car. Because of the shifting demand. 2, you have a bunch of resources and talent coming into the EV space that is causing leapfrogs in the technology and the underlying core EV technology. The cars are driving longer, they're recharging faster, they're driving better, they're just a superior product. Okay, now 3, you also have falling battery prices. According to Bloomberg New Energy Finance, the average price of a battery pack in an electric car has declined 76% since 2010. This huge decline is bringing average sale prices on the cars down, so now all these new millennial car buyers can actually afford electric vehicles. And 4, you have the environment, right? I mean, I live in California. I can just take a look outside and there's ash in the sky. We don't need any more reminders that global warming is here and it's bad for it's bad. And we need to fix it. Electric cars allow us to do that. So because of all of these converging trends, the writing on the wall is crystal clear, folks. The electric vehicle wave is here. It's not going anywhere anytime soon. Now, when I say the electric vehicle wave, everybody likes to think of passenger cars, Tesla, that vertical. But there are a lot of other verticals in the transportation market which are going to be electrified, one of which is the last mile delivery vertical. Now, this vertical is super attractive because guess what? 80% of freight in this country doesn't travel more than 250 miles because Amazon and Walmart, they have these huge distribution centers all over across the country, so freight doesn't have to travel that far. Well, 250 miles, that's less than the average driving range of your typical EV today, which is 300 miles. So the technology in EVs is already robust enough to wholly disrupt the last mile delivery market. At the same time, this is an oligopoly, right? You have Amazon, you have UPS, you have USPS, you have FedEx, and that's about it. So all you need to do is convince these 4 companies to go green, which isn't that hard because they're under tremendous socio-political pressure to cut carbon emissions and go green. You convince those 4 and the whole market is electric. It's really easy. So by 2025, 2030, you really could see the 350,000 delivery vans sold every year in the US be electric. You could see this entire $18 billion market be electric. Now, there are a lot of EV players out there, and some of them are attacking the last mile delivery space, but none of them are as good as Workhorse in this market. You see, Workhorse's C-Series delivery vans are already significantly more fuel efficient than your typical diesel delivery van. They're also already cheaper with a lower operating cost per mile than the diesel vans. And I emphasize already in those statements because the technology underlying these vans is only going to get better and better and better. It's going to get more efficient, the costs are going to come down, but the diesel van, there's no innovation going on over there. So whatever lead Workhorse already has today is just going to widen over the next several years. Now what this does is it gives Workhorse clear visibility to becoming a market-leading player in the last mile delivery space, and that implies huge upside potential for Workhorse stock over the next 5, 7, 10 plus years. Now, around 350,000 delivery vans are sold every single year in the US alone. Let's say Workhorse nabs 10% of the market at a $75,000 average sale price with 15% operating margins. Pretty conservative assumptions. My modeling says that gets you to $300 million in net profits by 2030. A 20x multiple on that implies a $6 billion valuation, more than doubles today's market cap. Let's say it goes to 20% market share, the same math gets you to a $12 billion market cap. So either way you slice it, this stock at $2.7 billion is not out of fuel yet. Well, that's all we have for this edition of InvestorPlace Quick Picks. I hope you liked what you saw. If you did, please subscribe, hit that notification bell, smash the like button, and maybe even come visit us over at InvestorPlace.com where we have some of the market's best analysis. Until next time, cheers and happy investing to all.